Okay, traders, welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, August 15th. Michael Boutros here with you this morning. Great to see you guys. Ziad, Ty, Peter's in the room. Michael, Mark, D, great to see everyone here. So, on the menu for today, Kiwi dollar. We'll start off with look at sterling dollar, which is also moving lower. Jamie made some really great observations on the extreme nature of the consecutive decline that we've seen on British pound. We went over that yesterday here in the webinar as well. Um, and while the markets are vulnerable for some sort of exhaustion low, there are definitely some key levels that we're looking at in sterling. So it's heading lower. We're tagging on the initial levels that we talked about yesterday. Today, still think you get that drive. We'll take a look at the levels there. Circle back to Aussie dollar, dollar yen. Dollar yen, by the way, shot 5 pips above that 618 retracement and came back. So it's still actually within the confines of the setup we've been following. We'll circle back to DXY, Euro, Dollar, CAD, and then obviously we're going to keep the updates going on gold and crude, guys. They're both, just really interesting levels. So Ty wants to take a look at Euro Oz. You got it, sir. Hey Ty, I saw your email from yesterday. My schedule is absolutely ridiculous, so I promise I will get back to you. I'll try to get back to you later today, Ty. Maybe we can squeeze something in next week, but I'll get back to you on that. D wants to take a look at Euro Yen, Euro JPY. Hey, you're more than welcome, sir. D, Euro Yen, I got you on that, no problem. And anything else? Any other trade setups that you guys didn't hear mentioned or would like to take a look at? As always, throw them on the message board at any time. Let's jump right in. So yesterday, I was messing around with this Kiwi dollar chart, really trying to get a grasp on what's going on here. So if you recall, the previous update, guys, was right on the back of the RBNZ. Here's what it looked like on the 9th. We were talking about the break, the consolidation range, the measured move of that triangle wedge pattern break actually targets 65.15. Okay. Now, the first major level that we were looking at was at 66.16. We saw that on Friday, broke lower, and that's now the initial weekly opening range highs. So sub 66.16 is what we noted last night. It's still kind of just basically the weekly range highs. The risk is lower, and we're looking for a drop into 65. When you see a break like this, inherently I'm looking for slope. I'm looking for guidance on where price is at now. We always want to try to give structure to the decline that we're in. So looking at this yesterday, I was messing around with it, and a pitchfork, modified pitchfork off the yearly high in February, the subsequent low in May, and the subsequent June high gave us this slope. Okay, lower parallel caught support. We're testing that right now. Here it is. We're testing that right now. Okay, the median line has been a decent pivot. I wouldn't call it anything, major, but it further highlights 66.90, which on the weekly charts was the bottom of the big range that we talked about. Excuse me, 66.60, which is at the big bottom of the big range that we were talking about in the weekly charts, which broke last week. So near term, I'm kind of really examining whether we get a little bit more of a bounce or not. Here's what it looks like on the intraday chart, and this is the same chart from yesterday. So we did get a tag of the lower parallel. Okay, here we dropped right into it, and here we are kind of bottoming out on divergence. So if you're holding short exposure, again, a good area to take a little off the table, perhaps bring your stops to break even or better. Look for the final push towards 65, but the levels remain unchanged. Resistance is still just above the initial weekly opening range highs. We're at that 66.16 mark. That's also where the 50 line of this near-term identified slope yesterday comes into play. If you break there, then you start to look for 66.60, the median line on a recovery type of play. All things held constant, we have to still keep in mind that this is still a pretty bearish trade, right? And the larger focus, rather, is still for that drive into 65.16, 65.17. It's the 764 retracement of the advance, but it's also, like I said, the measured move of that consolidation break. Here's the 120 minute. Right, so that consolidation break, measured move, takes us just a little bit lower. So I'm starting to think this thing, I'm not in any positioning on this. I wish I were, but I'm starting to think that you do get a little bit more of a recovery here. Not really interested in trying to play the long side until we get a little bit more constructive price action. But the more ideal play, in my opinion, would be the playoff of 65.15 if we get down there. Objectively above 66, you start to think recovery, right? That'd be objective weekly opening range break, basic resistance, former support. Would open the door. So kind of split here on Kiwi. I just want to really watch how we react today in the US Open at these lows. If that slope does break, might be a quick washout down towards 65.15. Is it just me, or do measured moves almost always come up a few pips short? Ty, it's funny that you say that because yeah, it actually does happen very often. You have to keep in mind one thing: self-fulfilling prophecies. I hate this kind of like, what's the word? I hate to make these mannerisms and just kind of generalizations, but when everyone's looking at such a clear consolidation break like that, and everyone's looking at a target, yeah, a lot of times market won't reach the exact target because there's so much pent up people looking at that. They're all positioning on the inside. Like I always say, my limits are always on the inside, right? My stops are always on the outside. Give myself a little bit more of a cushion on the limit. If it doesn't stretch, I don't want to that profit target. So yeah, we might not get all the way down to 66, 65.15. But the problem with trying to position for a rebound here, Ty, is you're fighting the dollar strength, man. We'll look at the DXY in a moment, but just a relative performance, guys. Here, looking at Bloomberg Terminal, dollar stronger against all its major counterparts today into the U.S. trade session, save the yen, which we've been playing on the short side, thankfully. Everything else has been weaker against the dollar. So for me to kind of try to position here for a short dollar trade, it's tough, right? You really got to get a little bit more conviction near-term price action. Now we could get that into the U.S. trade session. Like I said, we are getting divergence here on the 120 minute. We're getting divergence on the 60 minute, right? Lower low in price, close basis, higher low in the oscillator. So that has nothing to do with timing. This could still manifest itself for another day and a half before it starts to turn. So we have to be recognizing when the market's vulnerable for that. At these levels, I'm not interested in positioning to any fresh short exposure. Let's just say that. Todd, does that make sense? But a good observation. I wouldn't say almost always, but I would say it's a very common occurrence. It's a very common occurrence. Hi, Michael. How are you? Could we please take a look at pound yen? Someone, one of the traders I was talking about, one of the desks in my buddies in the city in New York, was looking at pound yen yesterday. I didn't get a chance to take a look at it, so let's do that today. Sure, Roxy. And did you receive my email about yes, I did. It's gonna be it's sad to see you go, Roxy. But we hope to see you back soon. Do you know the process of how to do that? Or if you need help with that, let me know. I'll shoot you an email back, but you could do it right on your own via the My Accounts page. Any questions on Kiwi? All right, here's sterling. The other one that we had highlighted from last night. So British pound still looking lower. Lots of things to look at. Jamie's update was so interesting, guys. If you didn't see it, the swing update from last night, he made some great observations, ran some scans on last time we saw this many consecutive day declines of 9 days down. The stats are pretty favorable for some sort of recovery. Now, it could take another day or two, another into the close of the week even before we finally see the material turn, keeping in mind we're obviously deep in oversold territory here, so you don't want to fight it. But certainly really interesting stats, and again, favoring some sort of near-term recovery in price. So I wanted to highlight the broader picture we've been watching. Key levels are being approached as we speak. Here's the sterling weekly chart we've been following for years, essentially. Since the start of the year is this pitchfork, but the broader ascent that broke, right? The longer term 2014 trendline resistance, which was perfect resistance, break, check the support, moved higher. That converges on former swing lows from June of last year at 25.89. Weekly chart, right? Daily chart looks like this. I got some soft targets coming into play right here on the daily chart. Initially, 2706, which is what we were sitting at yesterday. We're slipping below that now, 2616. Okay. is another level of interest for me. That's actually the swing highs that we made from back here in March of last year. Okay, and then the larger target is down at 24.33, 24.69. I don't, I'm not of the mindset that we get all the way down here. I'm kind of looking for 26.97, excuse me, 26.16 here to be a level of greater response and a pivot in price. Here's former swing highs, break saw acceleration, former swing lows, and the closed lows are pretty close to that level. And that would correspond with, weekly support just a little bit lower. So 26.15, I think I cited 25.89, 26.15, that whole region, that longer term 2014 trendline support comes into play. Near term, here's what the chart looks like. Okay, 25.87 and 25.16. That's sort of a region of which I would love to see a little bit more of a recovery. Again, here's the daily chart. How many days can this thing can take to the downside? Again, this is not when we want to fight it, as long as this position persists, and especially when it's an oversold sloping lower. That's when there's most juice. Okay, we have to be very, very nimble. We have to be very cautious if we're going to try to fight it. So, nothing to do just yet, but certainly recognizing that this thing is vulnerable, at least for a snapback, some sort of washout trade. Now, you did get some consumer price index, the CPI data inflation from the UK earlier today came in right in line with expectations, 2.5% year on year. Core strip out food and energy came in at 1.9% as expected. So, we didn't get much of a reaction off that play. Move on. Still have more US data coming on tap later in the week with University of Michigan price surveys. And we'll see if that shakes things up, but we still have to wait for some sort of an exhaustion low. Either a drop into this region would have me looking for possible long entries, or an objective break of the weekly opening range high, especially if that takes us back within the confines of the broader downslope we've been following off the yearly highs. Right, pretty clean as far as this formation. So if we get back above the weekly opening range highs, which would take us through that lower parallel, you'd start to think correction in Kiwi or in Sterling. Other than that, it's either exhaustion at these levels here, and again, there's divergence, but we can't operate on it yet. Or again, preferred motion is kind of a washout trade into this 25.87, 26.16. Former swing highs from March, former swing lows from June. Nice pivot region in price. Questions on pound? No change to any of the levels that we highlighted in last night's update. Okay. Previous night, we went over another couple of pairs here on Aussie and dollar yen. Dollar yen is still my favorite trade. It's disgusting to say, but it is. Aussie dollar still heading lower, and I think we're coming in some near-term targets here. First initial target was 72.30. We highlighted resistance at 72.98, essentially 73 to start the week. That was also the weekly opening range highs. Bearish invalidation, 73.28. We all know about that level, or 73.26 and 73.36. Downside, again, 72.30 and 72 is the 2017 open. Both levels of interest near term. The measured move for this consolidation break, very similar to what we were looking at in Kiwi earlier, takes this down into 71.45, 71.37. So do you get that on this initial stretch, or is there some sort of recovery, test of former support as resistance, and then a move lower? I'm of the mindset of that one of these levels may offer that snapback. But again, here's what it looks like on the intraday. Shoot, if this snaps back without me, I'll be pissed because I just missed entry. All right, 72 is the 2017 open. Now we haven't stretched into that since. Okay, here's what it looks like on the daily chart. Nothing really compelling here just yet. Intraday looks like this, and this is why, again, starting to think if we get a tag of 72, the low that we made and registered earlier was 72.03. I was starting to think you look for a little bit more of an exhaustion play, take a retracement of this stretch, look to pay a 38.2, maybe back into the weekly open, and then for that final drop. So we may have an opportunity to play some sort of recovery here, but ultimately, the larger area of which where we'd want to position, in my humble opinion, would be that 71.45, 71.37 level if we get it. Here's what this looks like at the 60-minute. I was looking at this earlier today, right? Look at that. Not really a divergent signal, so not really operable per se on this drop, but just some basic slope. I think I was looking at that, which matches up pretty nicely with that. Essentially puts the emphasis on sort of a near-term break above those swing highs that we made last night in Asia. So like 72.40s, 72.45. And then again, in such a scenario, this is just, guys, this is just kind of like a run through on what we could do as far as possible scenarios for today's session. Just wanted to show you that the 38.236 would be a nice initial sort of target at 72.60, but the 38.2 converges right on that same level we were talking about as the initial weekly opening range, former target support from the way down. Let me push that to the bottom so you can see the levels. Whoop. 100% extension from the top for the consolidation. 72.98, 38.2 of this drop, 72.98. Okay, so possible scenario. Again, for me, this is low conviction still because we're trying to fight the downtrend. I'm not interested in doing that. That's the break that would need to materialize to shift the near-term focus. Look for momentum to start clearing at least 50. I mean, this thing has been unable to do anything northbound of 50 on momentum intraday since, essentially since the break of the decline. So we have to look at that change in behavior and momentum. Again, downside break from here, that's sort of the sweet spot. Much more interested in getting a larger position, for a larger bite in the upside there. So interesting levels. All of these setups, guys, are kind of still poised here. Any question on Aussie? Dollar yen is actually really interesting for me. Here's dollar yen. You know what? Give me 2 seconds. Watch this. That's not what I'm trying to do. Bet you that 100 is going to be right there. Oh, right on. 72.45. Okay? Real near-term stuff, guys. That's the sort of your breakout zone. Last night's Asia session highs, 100% extension. So if this is just corrective, that's where you want to see the top max out. If it breaks there, then now we're talking about possible shift in Momo here. Okay. Hope that adds some clarity on Aussie. Dollar yen, dollar yen, dollar yen. Here's what dollar yen looks like on the weekly charts. Highlighting the levels of support, I just want to talk about again 109.91, that 200-week moving average, or excuse me, this is a 52-week moving average that we've been following. I just wanted to highlight again this key zone of support, 110.18, basically into 109.91 on the weekly chart is really what's stressed as near-term support. Dollar yen on the daily chart looks like this. Okay, makings of an initial nice reversal here off that same slope resistance that we've been following. We talked about yesterday how it was getting a little messy here, but nice rejection, right? Nice rejection. So look, I don't want to get too aggressive on this. We've been trying to play the short side for a while. I recognize that an overnight probe, like I said, 5 pips above our bearish invalidation level, which was that 618 retracement. But, it's dollar yen, it's the abomination is what it does. Look at that little peak just above 111.37 is what we were talking about as bearish inval yesterday. Here's the reversal and move lower. Momentum, 60 hold, right on the tip, right? And a nice reversal lower. So look, all things held constant, I still think this thing heads lower. Is it a super conviction trade? I wouldn't say that by any means at this point, but it's interesting that if you look at the relative performance so far on the session, that the dollar again is stronger against all its major counterparts, save the yen. Now, this risk-off bid, Okay, guys, think um, I do think may have legs, and I'll tell you why. We'll take a look at the S&P in a moment. Any questions here on dollar yen? Let me just go over the levels real quick. So from last night, no change really to any of these levels that we were talking about. This is from 2 days ago. This was the sweet spot that we wanted to see hold. Bearish invalidation 1137. We broke through, obviously just tagged that level, beat it by 5 pips and pull back. So tentatively, I still like the levels as are. 1137, still kind of want to keep that as, the barrier of resistance. Our bearish inval moving lower. Weekly open support comes in at 110.45. That's the new level that was added since this update. So that's sort of your first initial target. Downside target's unchanged, 109.91. Remember, the 52-week moving average and that slope that we were talking about in the weekly chart resides in this region. A 100% extension from the decline off the highs resides in this region. So 109.56 is a secondary ancillary target if you're holding on to shorts, but 109.91 is still a big level. Okay, still a big level. And on the daily charts, basic slope support, 200-day moving average, and over the next couple of days, the 100-day moving average all converge right here. Such a big spot, such a big spot. So, hoping we get that drive down towards 109.90. It's the abomination. Play at your own risk, but that's sort of the level that we want to see here. Questions on dollar yen. Ty saying golden cross. Is there a golden cross here on So the golden cross is typically moving average crossing higher at your objective. Right here, yeah. So what do I want to say about golden crosses? The one thing I would just note is that I actually did a study for Daily Effects, I think in 2011 on this. They're very lagged, Ty, and I'm just not a very strong believer. Now, Princeton Review, as I was doing that report years ago, ran a statistical study in which they were questioning the efficacy of golden crosses. It's always late, and B, statistically speaking, on like a win-loss ratio, it's not just that, it's not compelling enough for me. It's something to take note of. If we're bearish and we see a golden cross, great. To the downside, if we're bullish and we see a golden cross to the upside, adds more conviction, Ty. But very rarely will I allow that to shift my focus, especially, Ty, the fact that we're so near term. Looking at a daily 200, 100, 50, whatever you're using for the crossover is kind of tough to justify. You know what I mean? Okay, I am really looking forward to buying at 109.91. I mean, I think it would be a great trade. Me too. That is such a sweet spot. If we get down there, Ty, man, it's just the abomination. You always wonder if this thing's just gonna rip everyone apart. But I tread lightly with this. I never over position on it. So, if we get stopped out, we get stopped out. I'm not gonna get, bent out of shape over it. But as long as we're practicing good risk management. And just for information, I mean, golden crosses, by the way, the typical like technical analysis 101 is typically the 50 over 200 crossover. So on this specific one, when I brought up the 50, it was nowhere near the 200 yet. If you're looking over the 100 and 200 day, I don't know how much we could derive off of that, Ty. So dollar yen. Let's see if the abomination could give us finally some play here. It's been pretty tricky. The swing trades we've tried a couple of times on this it didn't pan out, but I'm hoping this time I've got it. We're in excuse me, we're in oversold territory. That's something that's great, welcomed. We broke basic slope support off the weekly lows. Boom, right? So hoping that we get some play here. Hoping that we get some play here. Recognizing that it is dollar yen. That is number 1, 2, 3, 4. Yeah, let me just show you the SPX. Pete, are you in the room? We got two of the Peters here today. Um, Here's Spoos. And this is just something I just wanted to show you because we were talking about this for so long, and it's just been insane. Everyone's throwing around Turkey as the reasoning and all this nonsense. Price was kind of just primed for the reversal, guys. We talked about 28.59 at length last week, the 1618 extension from the advance off the lows that we made back in April. And the outside high day reversal bar comes in, or high day reversal close comes in at 28.51. So this whole zone was sort of a region of which converged on slope, was vulnerable. The pullback, initial support that we noted was right at monthly open support. That's 28.23. That's where the 50 line resides. We bounced there, got 1 day recovery, and here's the reversal. So if we break today's lows, the risk for SPX is for a move down towards 27.97. That'd be just two equal legs, 100. Very, very conservative target. The median line's in there. So that would sort of be the play if we do break to the downside here today. Near term was kind of looking for clarity on price. I kind of threw on this slope. Don't know if there's any merits to it just yet. That looks interesting. So we'll leave the 75% line. Making a nice little stab right there at the highs. But again, two equal legs. The 618 of that measured move is 28.14. The 618 of the advance from basically the monthly opening range is 28.17. So this initial zone of support watch into the US Open. Like I said, if we get the break, 28.07, just a soft target to the downside, but the measured move is really 27.97 on the downside here. So just as a reference, do you see something similar with NASDAQ, Roxy? You love the NASDAQ, huh? Let's take a look. It's definitely not as clean. 38.2 is going to catch that. Yeah, we're grasping at straws here. I don't think the near-term picture is as clean, but let's take a look at what the daily looks like. So the issue with this is that monthly open support is still a ways lower, Roxy. Smiley face. The monthly open support is way lower, whereas the SPX, we were just talking about the fact that we're sitting at monthly open support trying to break lower. I do think there's room lower here. This may be more of a consolidation play than necessarily a kind of reversal, but divergence all into those highs. There's the high day close for the year. You can see that we drove into it. We couldn't make a close above it. Here's what the daily chart looks like on a close basis, right? So pretty rock solid as far as that resistance is concerned. On the way down here, yeah, I mean, there's not really much meaningful support in my opinion until you get down near 72.91. I bet you anything that the 618 probably converges right there as well. And let's see, survey says, boom, 72.87, so 3 pips lower. That's what would be key support for me on this one. Makes sense, Roxy? Excuse me. And let me just see what this looks like real quick. Real near-term stuff. 100 comes in at 73.30 basically. Oh, former swing highs. That's a nice spot too. So here's some downside targets to keep in mind: 73.30, 73.35. That swing high that we made from June, 100% extension. Oop, I have to adjust that. So the 100 actually comes in earlier at 73.43. What happens on the daily charts, by the way, guys, is when you put the candle high and low on the same candle, for some reason on TradingView, the chart disappears. So sometimes you won't see it on the daily chart, but here's what it looks like on the 4-hour. So 74.42, 74.35 is sort of a soft spot I would just look at as an initial downside. Beyond that, your 618 retracement, your monthly open support. And again, you can see how this may be some sort of near-term consolidation, right? Higher low, higher low, higher low, lower high, or just one high, lower high. If that is a lower high and we break this low, yeah, I'd be looking for a drop into one of these two zones. Make sense? Roxy says, yes, thanks a lot. I think the other day you mentioned you expected new high, or maybe I got it wrong. So I was expecting a test of the highs. The ideal scenario is that we would have gotten one last stab into this parallel for the divergent call and then the reversal. So, that didn't necessarily materialize. We failed right at the highs. Didn't get another divergent signal. This is still divergence here, right? But yeah, that's a classic failure. Classic failure. All right, next up on tap. So that was a quick segue for SPX. That was number 5, and NASDAQ. That was number 6. Let's circle back to the dollar crosses, shall we? DXY coming right up. So here's why I think we don't want to fight the dollar just yet. I still think there's more room to the upside before you even run into structural resistance on the DXY, which leaves more room to the downside on the euro. I do have euro at an interesting level, which I'll show you in a moment. But here's DXY, right? DXY levels haven't changed since the start of the week. Went over both of these. Here's DXY in the daily, right? We were talking about this resistance range, which has caught every single high this year. Not so much. Okay, the breach has us targeting 97, 10, 97.20. I think that's what I cited here, 97.10, 97.20, which is going to be the confluence of downtrend resistance and pitchfork uptrend resistance. How do I show this in the clearest way? Let's show you the weekly chart first. Okay, so uptrend resistance for this pitchfork off the lows that we made last year in this. Okay, on the broader picture for the daily chart, here's the pitchfork off the highs. Boom, boom, boom. The 50 line comes in right at that region. So give it 71.10, 71.20 is your first initial area of resistance. The big level is 97.78, 97.87. That's the 618, and just an objectively clear pivot in price. Former swing highs, acceleration on both sides, former swing highs, key 618 retracement of a multi-year range. That's sort of a bigger level for me. But near term, watch 97.10, 97.20. The camera feature is not working. I can't see. Guys, anyone having issues with the video? Oh, are you talking about the snapshot feature on GoTo? That's interesting. Is anyone else having that issue in the room, guys? With not being able to take a snapshot? Yes, looks okay, says Mike. Michael, Mark says camera is okay. Ty, might just be sort of a glitch on your end. Just try restarting the session. Just exit it and relaunch it and see if that helps. That's interesting. Peter says, yeah, it's good. Looks like it's just a isolated problem, Ty. By the way, guys, quick segue. Did anyone, was yesterday's webinar okay, or was there any issues on the webinar? Because I think they finally got their act together in the Daily FX office. So I forgot to ask you yesterday if the webinar had any interruptions. If it did, just drop me a quick note. So for the DXY, like I said, I think you look higher still. If you're holding long dollar exposure, watch that DXY 97.10, 97.20 as a first sort of interruption level. All things held constant, a breach of the upslope should see acceleration. So as we're heading into the end of the week, as we're heading into non-farm, or excuse me, Michigan University of Michigan confidence surveys, maybe that gives us the final accelerated stretch higher. You know, you're in overbought condition. As long as this condition holds, the propensity for the market to keep moving up is there. Watch these levels. Questions on DXY? Intraday, not really much to look at. Here's what it looks like. Initial break of the weekly opening range. I wouldn't even call this a break, guys, because we didn't really get much of a test high, though. So, you know, there's 97.10, 97.20. Williams are off the charts. Buying pressure, all time frames on the dollar. Not surprised, Pete. Not surprised. Typically, and this again from experience, guys, when we see a breach of upslope resistance, those are typically the sharpest parts of the move. When we see a break of a downslope support, those are typically when the market just sells off, right? So Ty, that kind of observation that you're making adds fuel to the fire. I love hearing that. Keep sharing those with me. That's interesting stuff. Okay, that's DXY. Number 7 on this session, and it's 9:08. Got to pick up the pace a little bit. So here's Euro. On the back of this, you'd expect to see Euro kind of with a little bit more room, right? Don't really have that. 113, what was the level that we had cited? What was it? 113.12. We're there right now. That was, so let me take a step back. So the basic pitchfork that we've been following off the consolidation highs, remember this triangle? I'm just going to remove this for a moment so you could see it. Remember this triangle, right? If you take a pitchfork off that consolidation break, there was a lower parallel, right? Everything matched up pretty well as far as the slope. The break saw acceleration, lower parallel saw interruption for a day. Yesterday we closed below it. If we take a parallel of that same slope, extending off the lows that we made in May, right, it basically puts us at support right now. On the intraday charts, we had highlighted 113.12, which again is just, you know, if you go back, a former swing low from this pivot region here. I think we talked about this briefly yesterday. I'm not sure if we were here in the webinar or not, but we're checking that region now. So, you know, it's an oversold. I'm not obviously advocating buying this, but I can't press a short from here. You know, we're at support. Now, ideally, you get the drop into the lower parallel, and this would put DXY at resistance, right? If your dollar finally makes it down into that 112.68, this soft spot right here. The measured move, if there is a consolidation break at hand with this wedge formation, actually targets 111.60. We talked about that yesterday, 111.86, huge region of support on a downside break. But first things first, that upslope I don't want to ignore, right? We actually saw, and let me take you back to the daily chart real quick on Euro. We actually saw with that upper advance, that 50 line, right? It was insane, guys. The precision that we got when we gapped above it, it was a breakaway gap that never filled back in 2017. Once we broke above it, support at that pivot, right? The 50 line for the upslope on the pullback, again, right there before launching into the advance for the euro that took us out to the yearly close. So that is to say that that same slope is now coming into play just a little bit lower. Again, 120, 112.78, 112.71, this whole region. for the euro, and that would put, like I said, DXY pretty much at that support region that we're looking at for its slope resistance as well. So really nice tidy levels, I want to call it, um, on the euro. Here's what it looks like on the intraday. Both those levels, no change to any levels that we'd highlighted earlier in the week on this chart. Okay, we're just breaking lower. We're testing this right now. Again, this you might get a little bit of a rebound off of one of these two levels, but ultimately the resolution of this broader breakout trade does target 111.80, 111.60. Near-term resistance is pretty objective now. At this point, 113.66, the target that we talked about earlier in the week that actually gave us that little bit rebound, that's near-term resistance. Bearish invalidation gets raised essentially or dropped to 114.48. That's the only thing that would put us straight bullish at that point. Euro dollar, number 8. Dollar CAD, I don't really have much to, we cleaned up the chart here in the webinar together yesterday. I'm still not a big fan of it. It looks cleaner in that the formation that we've been following has been holding like a charm. 100%, the 618 retracement of the decline held resistance into the weekly open, the pullback, median line, right? For that pitchfork that we had yesterday, perfect bounce of support. Here we are checking the 50 line again. Honestly, guys, I really have no opinion on how to play this. I really have the levels are holding. If you're gutsy enough to kind of play this back and forth, go for it. For me, it's just not, it's not my cup of tea. So we tried to clean up as much as we could yesterday, guys. Still 31.65 is still resistance, structural resistance, Fibonacci resistance. 130.42 is still the break we need to get to the downside, now converging on slope to challenge that lower parallel again, which we turned just ahead of last week. So we can kind of breeze over this one. Let me know if anyone has any specific questions on dollar CAD. Look, I mean, the broader picture, this is just a mess. Weekly chart for dollar CAD. What do you do here? So hopefully we get some resolution on this, some more clarity. Put a gun to my head. 131.64 is near-term bearish inval. If we get through that, we're likely to see some really stretch higher in price. But thankfully, no one's holding that gun, so I won't put anything on this. Ultimately, I want to see it move lower, but I have no conviction on trying to play that at this point. So that's number 9. Quick review of dollar CAD levels. Yes, D, I got your euro yen request earlier, so we will take a look at that. Let's do that right now before we jump into the commodities. Excuse me. So let's take your questions in the order they came in. Ty was asking about Euro Aussie first. So Ty, let's take a look at Euro Oz. That'll be number 10. Euro Oz. Okay, so last time we were looking at this obviously was back earlier in the month. Monthly open resistance, 100-day moving average gives us this kind of key zone right here. 2017 high day close, the high day reversal close, nice support, breach, resistance. Been offering some support on a closed basis here. Obviously, that's pretty apparent at this point. So watch 56.22 is sort of the key support on a closed basis for the daily candle. Okay, let me do this, Ty. Take a picture of this if you need it. This is the daily chart on Euro Aussie that we've been working on. Here's the weekly. $56.22 is the level to beat, man. There's not really much debating that at this point. This is your focal range right now for the break. Let's see the intraday. Momentum is also kind of pitiful here. All right, so it looks like actually slope held up pretty well. So this is a slope formation that we were following. Last Euro Aussie update on the intraday charts wasn't too long ago, if I remember correctly. Or it wasn't in the last 5 updates, but 57.28 was just what is that, the July opening range lows I think that we were looking at. Never actually broke until this level here. Shifted the focus lower. That was the last time we updated it. Was the rebound off 55.86. Near-term resistance, bearish invalidation, right? So we kind of came right into both those targets. We turned just a couple of pips ahead of that initial monthly opening range from the July calendar month, ahead of slope resistance on a nice divergence signal. Price action with a higher high and a close basis, the oscillator with a lower high, real subtle. Here's the pullback. Let's rework these levels, shall we? Okay, we'll leave that as is. We're breaking the 50 right now, right? We're right there. All right. I want to see what the low day close was on that drop. Oh, right above 56.22. Yeah, any way you slice it low, wow, 618's right there anyway. Woof. Yeah. So the 50 converges right on the 100% extension of this near-term decline off the weekly highs type, 156.53. Spot on. We're testing that as support right now. Weekly open support. These are all important levels, at least on the immediate front. Okay, all three of these. Downside targets. Okay. Hourly reversal resistance is right here. That's sort of be my line in the sand, is resistance, bearish invalidation for the near-term slope. Ty, does that help? So depending on how you draw this, that would be basically a trendline break, 3-point touch, or basically being tested right now. Is there any merits to this parallel? Not bad. Raised ceiling, turn right ahead of resistance, adding further conviction for this near-term support level. Okay, I think that's the level you need to be, and the 100% extension being there throws fuel in the fire, man. Throws fuel in the fire. He says, yes, learning. Thank you. Hey, you're more than welcome, sir. D, Euro Yen coming right up for you. This is number 11 on the session. Euro Yen looks like this. Let's take a look back, shall we? Okay. Interesting. Hmm. Euro yen. This is a tricky one, D. Um, I kind of have objectively, I have to say lower as the immediate focus. Um, this hundred's kind of played out because we already ran into it. So you would just basically be targeting the yearly lows. Um, you're in oversold condition. Here's what happened last time we broke into oversold in this pair, right? We just broke into it, so we could get that final drop towards slope, towards major key support longer terms 123.17, 123.25. I don't know if we get all the way down there per se, but there's not much to be super bullish about here. Let's see what the near-term picture says. Let's update this chart real quick. Don't need that, don't need that. Man, there is just like no slope to work with here at all. All right. Maybe some channeling here. Let's adjust this month. Weekly open resist or weekly opening range high gives you resistance right here on slope, which is pretty decent. Basically into the close of the week, 18th. 2 more days. 3 more days. Downside support, still that big level down at 123.50, 123.40, or 123.17. This is still, it's coming up more and more important even on the near-term charts now. It's interesting. Divergence near term, haven't necessarily registered just yet. Yeah. Listen, who is this for? D? Look, it's a very objective weekly opening range. Play the break. I would, if again, gun to my temple, I think you get the breakdown side to 123.50. The first level you need to see kind of clear through is just 124.92. 125 is a big figure, so that 100% extension, watch it for the push through. And again, those former swing lows is obviously, maybe, in fact, let's do this. I'm just watching the low. Okay, 124.60. So if we break the weekly opening range lows, excuse me, that's kind of your first level. Bigger support, 123.50, 123.17. I think that's kind of a key zone here. But I mean, dollar yen lower, I do like it. Euro lower near term, I do like it. That's yen strength, that's euro weakness, that's euro yen lower. I'm short 127.25. Beautiful entry. Nice, nice. Targeting 123.60. Stop now 126.60. What do you have at 126.60? Is there a level that you're looking at there, D? Nothing. Yeah, I don't really like that level. I'm going to be completely frank with you because it's not anything representative of just a protected trade. So look, here's just again, this is my humble opinion, D. I can't tell you exactly what to do, but this is just my opinion. Um, if you're trading a trade like that and you're deep in the money, your stop needs to be either against the former swing high. If you have the room and the tolerance against 27 is essentially the ideal play, the weekly opening range high. Because if that breaks, yeah, sure, I want to be out. 26.60 is neither at a near-term high or a weekly open. So my problem with a stop like that is if we just go check the weekly opening range high again, you're going to get stopped out for no reason. But there's necessarily nothing to shake you out of the trade yet. You know what I mean? Now, if you're looking at something like this, you might be thinking to yourself, well, this is slope resistance, right? And if we break above that, I kind of want to give out. I want to jump out of the trade. If that's what you're looking at, and this is a 3-point touch slope, so it does have merits. then your stop would be like against 26 20s, 2630s. In any event, the 2660 region just doesn't come up as a level. Um, does that make sense, D? I want my stop to be representative of something, you know, either a resistance slope that I'm watching, a former high, a former swing low, something. Ty says, why aren't you using the daily bars for stop placement rather than 60? Because Ty, if we're in an intraday position or a near-term position, I do not want to be looking at daily bars, man, because it depends what your time horizon is, Ty. We use daily charts more for trend, um, conviction on larger trend reversals, major key longer term confluence regions. But when I'm intraday trading, or if she's not necessarily D's not necessarily in an intraday trade, right? She's obviously been holding this from the 127, so from last week. But when I'm trying to assess near-term price action, Ty, I got to watch what price is doing in the now. What am I going to do? Wait for a daily close, Ty, to get me out of a position? Within the course of the day, the market could spike another 100 pips. I'll be upside down this trade before I even know what's going on. So for exiting trades or for adjusting stops, I definitely always take a near-term picture of what price action is doing on the now. 123.20, it is then at least book some profits. So look, D, objectively, as you head into the weekly opening range lows, yeah, if you got a really nice position on, I would be slicing something off. Stops on the protective front, sure, but we want to make sure that we're staying as objective as possible. Okay, thank you. Makes sense. Right on, D. Cheers. Interesting cross, Euro Yen. Probably something that should have jumped out inherently as a decent short after this break last week, and specifically with the Euro and the Yen doing what they're doing. The Yen has obviously been a little bit more of a tricky play, but yeah, get protective here. Get protective here for sure. Okay, what was the last one? 12. Who wanted pound yen? Roxy, it was you. Okay, cool. Pound yen. So here's the dragon, as they call it. Downside break. Wow, look at that slope tag. Lower median line parallel, support, break, acceleration, resistance, push lower, oversold condition. Yikes. So look, the objective longer term support target that materializes with a break of these lows, if we do make them, is 3680 into 3696. It's basically a key 618 retracement of the entire advance off the lows that we made in 2016. And also converges on the 2017 low day close, or lows day reversal close. So that's sort of your objective target on a downside break. Let me clean this chart up a little bit, shall we? Give me a moment. Oops. Well, you know what? I guess at this point we can remove this and get this just cleaned up. Woo! Look at those levels. Yeah, I'd watch that level 139.30. Actually, the close low or the low day close for June, you'd be tempted just to look at all the swing lows, but I've found, guys, over time it doesn't necessarily just work that way. So my point being, The fact that this low swings in on the low day close, right, gives you 39.18, 39.30. Nice spot. So on a downside break, that's sort of the target. How you look to play that from here if you're not already in this is tough. Is tough, Roxy. I hope you're in this already. If you are, hold on tight to 139.30. That's an area I definitely would take a little bit more off. Stops against the high that we just made for the weekly opening range, which is going to be against that slope. I think that's a pretty safe stop. So you have to be willing to open up that level. But yeah, it's interesting. Let's see what this looks like on the near-term time front. We're obviously deep and oversold on daily chart with a downward slope, so nothing worth fighting. Definitely looks lower to me. Downside break of a descending formation, typically your sharpest part of the decline, right in line with our expectations. I really need to redo these levels, obviously, here. So we're over on time, Roxy. Do this. This is your last day in the session, isn't it? So do this. We still have a session tomorrow, I think, right? This is the daily chart. Watch these major key levels if you're holding short exposure. 140, I want to call it this 100% extension, but basically the opening range high for the week. That's really the level to trade against on the short side. But certainly risk is lower still on pound yen. Okay, guys, I'm way over on time. Remember, quick reminder that Jamie's midweek strategy webinar got pushed back till Thursday this week, so he'll be on tomorrow right after my webinar. That being said, we're pretty light on data. Okay, we're pretty light on data, so watch price action during this U.S. trade session. All these headlines with Turkey. If you go just a quick breeze over the major financial publications is what I do, guys, to kind of just get an idea of what the markets are looking at right now. This whole Turkey thing kind of like taking the headline stage. So risk is still weighted to the downside, at least on the near term. We talked about the S&P charts. Watch price action as we head into the close of the session. Best of luck trading. I'll see you all tomorrow morning. Cheers.